All right. Well, good morning, everyone. Thank you so much for joining us today. And thank you to OCAR for having us. We are super excited to be able to host this class for Orange County Realtor members today. Today, we have Rob from Reverse Mortgage Educators as our instructor to show you how you can earn more listings with the reverse mortgage for purchase. So just a couple of things before we begin. First, if you would like to receive a copy of this PowerPoint, just go ahead and send me your emails through either the chat box or the Q&A. You can put a question in the chat box. We will be answering questions today. We will be answering questions at 11:30 and at 12 o'clock. Again, you can put a question in the chat box or the Q&A at any time. We are recording this class and the copy will be sent to you tomorrow. But if you can, please stay until the very end, as we will talk about how you can take advantage of our complimentary software and marketing materials to reel in the next listing. All right, Rob, you can take it from here now.
Thank you, Marixa. Thank you, OCR, for having us today. We're at the last push of the year here. Try to get you some good information to, kind of spark up your 2023 business. So what we're going to be talking about today, obviously, is the reverse mortgage, but more importantly, how this directly affects your business. My name is Robert Ross. I'm with Reverse Mortgage Educators, and I've been working with older homeowners and this product specifically for the last probably 17 years. I'm in the trenches every day, still offering these products. I fund these loans, so I'm there working with these older homeowners still today, and obviously helping them utilize their most precious asset, which is their real estate. And then I've been working really closely with the realtor community over the last probably 9 or 10 years, and their prospective older homeowners that are looking to either sell or do something different with their real estate. So let's talk about right off the bat, what has transpired over those 9 or 10 years of working with realtors. Well, we get a lot of the same questions from realtors, and they're coming directly from either their book of business or their older homeowners they're working with, or just people in their sphere. And so we've honed in on really three of the questions or three of the topics that come up with reverse mortgages, and how and what you should be thinking when you get these questions or these topics that arise between you and your prospective older homeowner that you're working with. So right off the bat here, let's get into this. My PowerPoint will cooperate. There you go. Why should a realtor know about this product? How is it going to benefit you and your business, right? Well, like I said, there's really three ways that we've seen how this product can help a realtor's business. And there's probably more ways than that, but let's talk about the main three that we see here every day in, day out. Just by sheer, numbers of working with older homeowners, you're probably going to get the question of what is a reverse mortgage. And so obviously there's ways to answer this properly. There's ways to answer this question improperly. So having some sort of general idea of how the product works and a very basic way to explain it to your customer is obviously a benefit to you as well. Having that information readily available at your fingertips to address those questions, puts you in the light of you're more than just a realtor. You know more about other things that have to do with real estate, loans, title, trusts, things like that. So having just a general explanation of how the reverse mortgage product works is great. But what I want you to realize is this: when somebody is asking you about a reverse mortgage, what they're really telling you is that I'm an older homeowner, I have equity, I have a home naturally, and I'm having some financial difficulties in retirement. And so that's an opportunity for you to obviously educate them about the product, but more importantly, to look at all the options available to them. And here's something that's really, or if you will, real time to today's market. With the higher interest rates that we're in right now, we are turning away more older homeowners than ever that inquiry or apply for reverse mortgages. Because in our industry, when the interest rates go up, our loan amounts go down. So either A, the loan amount that we can offer, or FHA or the government can offer for a reverse mortgage, is not large enough to pay off what they owe on title, or maybe the loan amount just isn't providing them enough benefit as it could have maybe a couple of years ago. And so what does that mean exactly? Well, their problem or their financial struggles they're having don't go away. They still exist, right? So here's the numbers that we've come up with in our industry, not just my company, but in my industry. about 35% of all inquiries that actually look at a reverse mortgage as an option get one, and the other 65% do not get one. So if we're turning away all those people, what are they doing, right? That's the question. So if they still have those issues and they're not getting a reverse mortgage on the house they're living in, let me be the first to share with you that they're selling their homes. We're seeing this real time. And so when they think about that, when they actually come to that decision, look, I want to sell my property, well, they're also trying to accomplish a few other things as well. They're trying to maybe retain some of that equity they have in their savings account or checking account for retirement. Obviously, they got to put a roof over their head again for the rest of their lives. And when they're also selling that property, they're trying to escape or get away from having a monthly mortgage payment. And so that's where either this product, the reverse mortgage for purchase, could help, or they're just selling and buying all cash in a different market. So they're selling their homes if they can't get a reverse mortgage on it. That's number one. So when somebody asks you, what is a reverse mortgage? Just start thinking listing. This is probably going to turn into a listing. So that's number one. Number two, for those older homeowners that have already decided, hey, this house is no longer right for me, right? Maybe the house is too big. Maybe the kids moved away. Maybe they're tired of having a mortgage payment on that property. Maybe they're wanting to access some of the equity but can't, right? So having access to a reverse mortgage or selling that home is going to get that situation handled. So a lot of times they're listing that home, they're getting that equity out, they're putting some of that equity in the bank, and they're using the other portion of that equity to buy a house, either with a reverse mortgage or not, or some sort of other financing. But just know that, hey, when people decide, I want to sell my home, they're trying to accomplish a few different things. And the reverse mortgage for purchase could help bring all those, strategies to light. So that's number two, using a reverse mortgage to buy a house. Now, just to be super clear on this, the reverse mortgage is being placed on the house they're purchasing as purchase money. They're not pulling money out of their current property to buy a house. They're using a reverse mortgage as a purchase loan. So whether they own a house or not is irrelevant. As long as they have the right amount of down payment based on their age, they can use this type of loan to pick up the difference of the house they're buying. So it's a purchase loan, in case you weren't aware of that. Now, number three here, there's a lot of reverse mortgages that have been done over the years. I've done a lot of reverse mortgage throughout my 17 years in this industry. My business partner, Ryan, has, my industry as a whole has, right? There's 54,000 active reverse mortgages in Southern California as of 2022. That's a lot of older homeowners out there that have reverse mortgages. Now, one thing that I know, because I get the questions day in and day out, a realtor, a financial planner, a family member may call me and say, hey, my parents had a reverse mortgage. My last surviving parent passed away recently. They have a reverse mortgage. How does this work? What happens, right? And so having the knowledge or having the information to either educate the heirs of the property or the borrowers that still have the reverse mortgage about how this works down the line could be a benefit to you. And here's why. What we have discovered is that more times than not, those houses that have reverse mortgages after all the borrowers of the loan have passed away end up getting listed and sold. And so by educating the heirs or even the homeowners that have a reverse mortgage about the end processes of a reverse mortgage when all the borrowers have passed away could put you in a position to get a listing down the line. So when you come across an older homeowner that has a reverse mortgage on their property, don't just think, hey, they got a reverse mortgage, it's all fine and dandy, they're all set for the rest of their lives to live in that home. No, one day that they're going to pass away and they may not know how to handle that, or their heirs may not. And so educating them about those processes could put you in position to get that listing down the line. So what you're really doing is creating a future listing for yourself by educating them. We have a whole slide that's going to talk about that today. So a quick recap on these first three. When somebody asks, what is a reverse mortgage? I want you to start thinking listing more than them doing a reverse mortgage on their house. Because the chances are they're probably going to be disqualified. Maybe they owe too much. Maybe the loan didn't provide enough benefit. Maybe the house they're living in is not the right house for them anymore, and they should consider getting to a different home to better their retirement or have a more suitable home for their retirement. Number two, for those clients that have said, look, I need to do something different with my real estate. this is not the house for me anymore. I need to sell it, but I also want to retain some cash. I want to not have a monthly mortgage payment, and I want to live in a house that suits me. Reverse mortgage for purchase loan can help out with all those solutions. Now, the last one here, again, for those folks that already have reverse mortgages, that's a future listing in the future here. We see that all the time. I get the questions day in and day out. So that's 1, 2, and 3. Now let's dive a little bit deeper into these topics. So regarding number 1 on that first slide, what is a reverse mortgage? How would you explain this to an older homeowner? Well, if you want to compare it to a regular mortgage, that certainly helps out. And here's how you would do this. So a reverse mortgage is much like a traditional loan, right? A traditional mortgage. The difference is there's no monthly mortgage payments on a reverse mortgage, right? And they're actually optional. And here's how you can explain this. So just like a regular mortgage, right? Like your typical 30-year fixed loan, you get a monthly mortgage statement every single month, right? That's going to show you the payment. The payment's made up typically of interest and principal. You make the payment, next month you get your mortgage statement, and your balance dropped by whatever principal you paid on the last payment, right? Well, with a reverse mortgage, it's somewhat similar. You get a monthly mortgage statement every single month. It's going to show you the interest for what you've borrowed. Now, if you do nothing and let it be a reverse mortgage, the interest that was charged for that month will simply be added to your balance. And then next month, your mortgage balance will be that much higher. Now, what if a customer wanted to pay that interest, right? Could they do that? Of course they can. Pay the interest, and what happens is, since you pay the interest for that particular month, next month your balance is exactly the same as it was from the previous month. So now you've created a loan where it's basically an interest-only loan if you wanted to. Maybe you only wanted to pay a portion of that interest, maybe half of it, let's say. Well, the other half you didn't pay would add to the balance. And then next month, your balance will be that much higher. Or maybe you wanted to pay more than the interest for that month, right? You can do that too. And what'll happen is that you'll start to pay down your balance. So what you ultimately have here is a loan that older homeowners can qualify for based on a low fixed income. They can have it and they can make payments if they want to or don't want to. And so it's kind of like having your cake and eat it too, right? But the rule is you never have to make a payment. Now that brings me into the next bullet here. If a client never makes a payment on a reverse mortgage, is that a problem? No. That's how these loans were designed originally. You don't have to make payments. Now, if you have somebody who contributes payments on and off throughout their life versus somebody who does not, those are going to be two different outcomes. Obviously, the person that does not make any payments is going to have a higher balance in the future than the person that would contribute on and off throughout their life. And so that's a great thing to have in place, an optional payment loan. But if you never want to make a payment, that is fine. You get to live in your house for the rest of your life and know that you have a roof over your head for the rest of your life. Very good thing to have when you're on a fixed income in retirement. Now, clients can qualify for a reverse mortgage despite not qualifying for any other type of financing. Let me dive into that a little bit. So with reverse mortgages, because you're not making a payment, that doesn't get incorporated into your DTI or debt to income ratio. As a matter of fact, we don't even have debt to income ratios. We want to make sure that you have enough income to handle taxes and insurance, an HOA fee if you have one, whatever's on your credit report as an active trade line, and then just a few bucks left over for utilities and groceries, so to speak. And usually our typical older homeowner that's making $1,500 to $1,800 a month in Social Security can qualify for this mortgage. So that's a very strong thing to have when you're an older homeowner living on a fixed income to try to get a loan that could help you either buy or refinance your property. So the fact that you can qualify for this loan on a fixed income is what gives the loan its legs. Now, for the longest time, the reverse mortgage was only available in a refinance product. In other words, they can only get a reverse mortgage on the house they're currently living in. And so, that happened all the way from the late 80s up until 2009. So think about all that time. If an older homeowner was having some financial struggles, or maybe the house they're living in is no longer the correct home for them, really all they could do is get a reverse mortgage on it and stay there and age in place. So that wasn't the reverse mortgage was not a very exciting tool or mortgage for the realtor community, right? Because you knew there was never going to be a listing there. But then fast forward to 2009, Congress, FHA, HUD rolled out the reverse mortgage as a purchase loan. And so obviously the first year we didn't do a lot of that as an industry. And then fast forward to today, we're starting to do more and more reverse mortgage for purchase loans. And especially in today's environment, when someone's struggling in their home and we can't give them a big enough loan amount to pay off what they owe because of the current interest rate market that we're in, they're now turning to list their homes. So that reverse mortgage for purchase is what's going to help them make that fundamental decision to list and rebuy, because it's going to increase their purchase power. If they only have maybe 3, 4, 500,000 coming out of the house that they were living in that you just sold for them, and they can't find anything that's at that price point to buy all cash because they don't want a monthly mortgage payment anymore, kick in that reverse mortgage, that'll bring up their purchase power to maybe like a $600,000, $700,000, $800,000 purchase price. And now the market starts to open up a little bit more for them in terms of properties that are available. So use the reverse purchase to increase purchase power. Now, many clients that I've met with over the years, I've met with a lot of older homeowners and the realtors that referred them at their houses. The kids are there, the families are there, the realtors there that referred, of course, the homeowners are there. And a lot of times when I step into that meeting, whether it's at the kitchen table or the coffee table in the living room, there's no intentions of wanting to sell that home. They're still struggling with that idea, right? And so they bring me in to talk about reverse mortgages. And one of the things that I've found most effective in those meetings is to sit down and run a simple budget for the older homeowner. So how much do you make? Here's your expenses. Here's where your shortfall's at. This is why. It's usually the house, right? The mortgage payment's the culprit. And they would simply, maybe the older homeowner would say, well, why can't I get a reverse mortgage on this property? And I'd say, well, number one, it doesn't pay off what you owe. You owe too much. Or maybe number two, the house you're living in, this thing's 2-story. It's too big. You got a pool. Kids moved away. Why are you staying in this house? Maybe the house is dilapidated and they don't have enough money to maintain it. And so we could start to go down that road with them a little bit. They start to see why selling their home is a better option than staying put. So running that budget, exposing those issues is what's going to bring the customer to the realization that, hey, maybe I do need to sell my home. And maybe this reverse mortgage option to buy my next home is what's going to be the kicker to get them into that next property. And of course, the benefit to you all as a realtor is to get that listing, right? So running a budget, very effective strategy. And it's quite awakening for a lot of those older homeowners to see where their holes are at. Now, let's talk about refinance, right? This is when an older homeowner would stay in their property. And this is an important area to explain because, like I said, you're going to get questions about reverse mortgages. And they may say something along the lines of, you know, I heard I can get a reverse mortgage and I heard that I can get monthly payments or pull cash out or have a line of credit. That's all true. So this is how you would explain that to somebody. I'll give you your typical cookie cutter example. Let's say somebody calls in, they say, hey, Rob, I want to do a reverse mortgage. I'm 75 years old and I owe about, you know, $300,000 or $200,000 on my $800,000 home. Obviously they have a lot of equity. And I would say, okay, based on your age of 75 years old, you qualify for, let's say, just in today's numbers, 50% loan to value, right? Okay, so we know that half of 800,000 is 400,000, right? They owe 200 on their current regular mortgage. The first thing I have to do with my 400,000 is I have to pay off their current mortgage. So we pay off that 200. Right there, their first benefit is that the monthly mortgage payment is removed from their budget because we paid off their current mortgage. But remember, they have an additional 200,000 that they qualify for. This is the money that they can receive and cash out in a few different formats. One of the first formats they can do is they can say, hey, that 200,000, can you give me installments from that money into my checking account so I can use that to subsidize my retirement? And we can do that. So we can either set those payments up as a what's called a tenure. That's a TENURE. That's a payment that's made to you for the rest of your life based on life expectancy. That's one option. Or they can say, you know what, that's not enough money, I need more. Then I would say, okay, well, we can do what's called a term payment. And we can now say, okay, how much do you want? Do you want 3,000, 4,000 a month? I can plug those numbers into the system and it will tell me how long they will receive that money for. It's called a term. So either 10-year term, or if they want to receive monthly installments. Or if they say, I want a lump sum distribution at closing, can they do that? Yeah, absolutely. A lot of times people may do that to remodel a kitchen or a bathroom, or help out the grandkids, or help their younger children out with a down payment for a property. All kinds of reasons I've seen them pull cash out. So they can do that. Or they can also set up what's called a line of credit, right? This is a line of credit that's built into the loan, and they can pull money out of it as they see fit. Now, that option, in my opinion, is probably one of the most intriguing, because if you think about it, if you haven't borrowed the money and it's there for you to use whenever you want to, you're not being charged any interest on that money you haven't borrowed. It's just sitting there, right? It's not a part of your balance yet. You can pull it out whenever you want. And on top of that, the money is guaranteed to be there for the rest of your life. It can't be frozen for anything at all. So even if the housing market completely crashes over the next couple of years and a reverse mortgage borrower has a substantial amount of money in their line of credit, it can't be frozen, unlike traditional home equity lines of credit. Traditional home equity line of credit can be frozen anytime by the servicer or the lender based on any kind of market conditions they see fit. Can't happen in this world. This is available with the FHA reverse mortgage, which, by the way, is known as a HECM, HECM, which is an acronym for home equity conversion mortgage. The other thing about that line of credit is that they will increase the money that's in there, more money you can borrow as the years go by. So even if the housing market is crashing and you have a couple $100,000 in this line of credit, next year, after 1 year of having that line of credit, that could be another 10 to 15,000 bucks in that line of credit for you to borrow, even if the housing market's going down. So that's something else that's built into that loan. And of course, lastly, whatever you do pull from the money, it doesn't require you to make a payment. It just becomes part of your balance. And now your balance is a little bit higher based on what you pulled. And now you're deferring interest based on that amount. So again, can't be frozen, can pull money out whenever you want. Whenever money's in there, we'll get growth. So those are the three things that are cool about the line of credit feature. Or you can do a mixture of all this. You can say, hey, I want X amount of dollars per month sent into my checking account to subsidize my retirement. I want a lump sum of cash at closing. I want to redo my kitchen. And then the rest of it leave in the line of credit, and I'll pull money out as I see fit down the line. So there's ways to structure it in many different ways to make the loan work for you. That's your typical refinance scenario that I see probably day in and day out. Now let's talk about a reverse mortgage for purchase. This directly ties into your business, obviously, because it's a purchase loan. Let's show you how this works. Your typical downsizing reverse mortgage scenario. Let's say we have a 74-year-old borrower and they decide they want to sell their home, and you're the listing agent on that property. And you're listing the house for $950,000. And after you sell the property for them, they net $490,000 in equity after paying off their mortgage, after paying off all the real estate costs associated with that transaction. And now they have $490 to work with. And now they're telling you these things. Of that $490, I needed to put a roof over my head for the rest of my life. I also don't want a monthly mortgage payment, and I want to try to retain some of that $490 in my savings account for the future. And you're thinking, how is this going to happen? They don't want a mortgage payment. They want a house. They want to retain some of that cash. Are they going to buy something $200,000, $300,000, $400,000 in another market, maybe outside of Orange County, maybe out in Riverside or even further out? It's going to be tough, right? So this is where the reverse mortgage could fill that option for them. Let's say you find them a suitable replacement home for $650,000. Now, based on the age of 74, we say, look, of that $490 from your previous home that I sold for you, use 387 of that as a down payment on the new property of the 650 home. Naturally, we're going to come up with a difference of a reverse mortgage. So 263 is the loan amount, 387 is the down payment, and now they've closed escrow on their $650,000 property, right? Now they're in their home, they're living. What have we done here? Well, first of all, you put a roof over their head for the rest of their life. Number two, they were able to retain $103,000 from their previous home's net equity. So now they have $103,000 extra in the bank, and they didn't generate a monthly mortgage payment, or they made it optional, if you will. But if they never make a payment, that's fine as well. So you've done it. You've achieved their goals. A house, cash in the bank, and no monthly mortgage payments. And that reverse mortgage was placed on the house they're buying, the 650 home. Now, maybe this person had some bad FICO scores. Maybe they had a 500 FICO score. I don't necessarily care about their credit scores. What I do care about is how they paid their bills in the last 24 months. If they have some blemishes, either on their property taxes of their previous property or any real estate that they currently own, or maybe they missed a insurance premium, maybe they missed a car payment, a mortgage payment. And so if we see some derogatory payment history there, then how do we address that? Well, it's very simple. We start to look for some sort of hardship that happened in their life. It could either be a medical expense, an automobile repair, a house repair, something that came out of the woodworks that was expensive that caused them to allocate funds toward that as opposed to paying whatever bill they were late on, right? And so that's the hardship. And what we would do at that point was to have them write a letter of explanation, and then also usually provide some supporting documentation proving the hardship. We give that to our underwriters, and that problem goes away. We don't care about their derogatory credit or payment history and any of the housing stuff. So that's a very make sense loan. And believe me, with older homeowners, when they're living on a fixed income, one crazy bill that comes out of the woodworks is going to cause them to possibly default on another bill. Now, for those folks that had, like I said, a lot of our older generation, our older homeowners are living on Social Security or some sort of pension or a combination of that. So they're on a limited income. But the fact that they can still get a mortgage to buy a house or refinance their house with a reverse mortgage based on that income is what truly gives the loan its legs. So limited income is okay in our situation. Now let's talk about what you need to know before you write an offer using a reverse mortgage as a purchase loan. Well, number one, pre-underwriting, very important, especially in our industry. Our industry, our loans are manually underwritten. So there's no Fannie Mae DU or Freddie Mac LP systems that we run our loans through. We have to manually underwrite, go through the credit report, look at where the down payment's coming from, look at all aspects of the loan to pre-underwrite it. And they take about usually a week or two to do a full pre-underwrite. And one of those reasons is because we have to order third-party services, such as have to order their property tax payment histories from the county or any other REO that they have. I have to order insurance payment histories for the property. I have to look at the credit report. I got to order all this stuff, right? So it takes time. It usually takes about a week or two to do a full pre-underwrite. So if you've ever worked with a reverse mortgage loan officer in the past, and they said, give me their date of birth and what's the purchase price, and they run the numbers and they say you're qualified, they're not qualified. There's a lot more work to do. So pre-underwriting is very important, especially because we're working with an older homeowner. We want to make sure we close on time. These transactions for when they're leaving their home they've lived in for a long time and buying a replacement, they're delicate, they're sensitive. We want to make sure we hit all of our marks on time. The last thing I want to see is an older homeowner not be able to close escrow. So very importantly, pre-underwrite right away. Now, when you get a reverse mortgage, you have to go through counseling. This should be done along or during the pre-underwriting stage. So once they go through the counseling session, this is what allows us to order an appraisal on the house they buy. So obviously when you get an accepted offer on the house they're buying, the first thing we have to do is order an appraisal. So we want to make sure that we get them counseled as soon as possible. Now, when we provide them some preliminary figures, we give them the counseling package that has a list of counseling companies in there. They call them, they schedule, it's over the phone, and it's about $150 for the counseling session, and that should be done immediately. On these types of loans, on a reverse mortgage for purchase, we can't have any seller or realtor concessions. So they can't contribute cash to closing or anything like that. And that could also be labeled if it's personal property, right? So if personal property is coming over with the transaction, like a refrigerator that's not built in, right? Just a regular freestanding refrigerator, that could be considered a concession as well. So it can come over in the transaction or be recognized in the RPA. It just can't have any value given to it. So you'd have to, amend the contract to make that work. Now, of course, if you have any questions when using a reverse mortgage to buy a house or anything at all, this is a realtor only hotline. This 888 number here is for realtors only. So when you call this number, we always make sure we're available to answer, especially on the weekends. We know that you work on the weekends. So we try to get back to you as soon as possible if we don't answer. So leave a voicemail, but we usually will pick it up on the weekend. So 888-242-5959. Okay, Marixa, do we have any questions at this point in time?
Let me check. I don't see any questions, so I believe we can go ahead and move on to the next half of class.
Sounds good. It is 11:30, right on time. Okay. Now, let's talk about some market growth and key facts with our older homeowners out there, more particularly the baby boomers to be pinpointing. So now this isn't necessarily picking on the boomers or anything like that. It's just the facts of the facts. These are all this information has been dug up through great sources. And to be quite honest with you, I mean, it seems like all generations are having some struggles saving for retirement and getting ready for that time, right? Even my generation, Gen X. Obviously, the difference between someone like myself and an older homeowner that's 70 years old is that I have more time to work and try to make up for my retirement down the line, right? I got more years to put away money for retirement. And so some of our older homeowners don't have that luxury. So let's talk about this. How is this affecting our older homeowners and what does it mean to you? Well, first off, we have about 10,000 boomers turning 65 every single day, and that will continue till 2030. That's a lot of older homeowners hitting the retirement age of 65. Naturally, that puts them in the correct age to qualify for a reverse. So that's an option for them, whether it's a refi or a purchase loan. In addition to 10,000 boomers turning 65, we also have about 10,000 boomers retiring every day as well. Whether they're ready for it or not, they're retiring. So we're starting to see that number trickle up as well. Now, in America, we have about 57 million people in 2021, and that will increase to about 76 million in 2035 of Americans 65 and older. That's a lot of people that are going to be hitting retirement and doing things and trying to figure out how to make their retirement work. And so be ready because you're going to start to feel their presence. Now, according to the Transamerica Center of Retirement Studies, across all households and all workers, the average working household has about $93,000 in savings. And so that's not a lot of money to have in savings, especially in today's market, right? With high inflation and the cost of living. So, and also the average Social Security check out there amongst our older demographic is about $1,600 a month. That's about $19,368 a year. Now, what we've discovered is that Americans 65 and older, they're spending about $47,000 a year. So they're spending about $28,000 more than what they're making a year. Where's that money coming from? Well, a few different ways. It's coming from their last IRAs or stocks or any kind of retirement accounts they have. It's coming from family members. It might be coming from reverse mortgages, lines of credit. They might be borrowing it in other ways. So they're spending more than they're making, okay? So there's a bulging issue happening here. Now, this didn't happen overnight. Back in the day when my dad retired, when he retired, he got a full pension. It's like he never stopped working and he still got his same paycheck, right? His dad as well. Fast forward to today, the pensions are a thing of the past for most companies. Now it's a 401k, which is funded by the employee And in some cases, you might get employer matching benefit. So the 401k is taken over as far as a retirement vehicle. The challenge is, though, it's hard to put away money in your 401k, especially again in today's environment, right? People are holding on to more of their cash in their possession for just the cost of living, and rather than putting it in retirement. So it's very challenging to fund a 401k over your lifetime properly. Now, what does this mean? Well, a lot of our older homeowners out there that are 65 and older, their wealth is built up in their equity. That's where their biggest chunk of money's at, right? And as a matter of fact, it's north of 8 trillion. And so I think I heard some sort of astronomical figure the other day. It was about 9 or 10 trillion. So I got to research that again. But make no mistake about it, the bulk of their wealth is tied up in their real estate. The challenge is, how do they get to that, right? How do they get to that? Do they sell their home? Do they use a reverse mortgage to access it? Do they get a regular mortgage cash out? Well, rates are high. Do they get a line of credit? All those are viable options. What's the right one? Well, every case is different, right? But I will tell you this. They need to get to that equity, and they need to do it soon. They got to somehow budget, get it out, and have it sustain their life, right? The burn rate on that money has to be able to sustain their lifestyle. And so a lot of our older homeowners right now, unfortunately, are house rich, cash poor. And so we're starting to see older homeowners start to list their homes to get to that equity. And of course, they still have to find a replacement home. That could either mean buying a house all cash, reverse mortgage for purchase, whatever that situation is. It's a case by case situation. And so they just need ways to get to that equity safely, which, by the way, involves you. You're a realtor, you have a real estate license. It's more upon you now than their financial planner, because they're spending down their assets with their financial planner, and they're starting to leverage their home equity more and more. Now, let's talk about what happens in the future with a reverse mortgage. Now, if you go back to the very beginning of this presentation, that third bullet, for those folks that have reverse mortgages now, the 54,000 people in Southern California that have reverse mortgages, a lot of those folks don't know how to navigate the reverse mortgage down the line, or their heirs don't know what happens if their loved ones pass away. And so having that information and explaining it to an older homeowner or even their heirs could put you in position to get a listing, because these houses get listed after they pass away. I see it all the time. I get the questions. Hey, Rob, just came across a client today. It's an heir of a property. Their parents had a reverse mortgage. They passed away. How does this work? And I explain it to the realtor. The realtor takes that information to the heirs. The heirs like what they're hearing or the options, and they usually end up listing the home. And hopefully with that realtor that brought them that information, right? Very important. So there's two likely outcomes with a reverse mortgage. Either has positive equity or negative equity. And that could be from various reasons. Maybe they lived with a reverse mortgage for 25 years, never made a payment. Maybe the housing market has dropped. There's all kinds of reasons why there'd be either equity or no equity. Let's talk about the positive equity side first. Let's say we have a home value of $950, and the reverse mortgage balance at the time of all the borrowers passing away is $600,000. What are the heirs' options at this point in time? Well, the first option, if they want to keep the home, they certainly can do so. However, they have to pay off the reverse mortgage, and they would pay that off either with cash, another loan, or some sort of combination of that. Pay off the reverse mortgage, keep the house and the equity, and you're free to do whatever you want. These loans are not assumable, so they have to be paid off when the last remaining homeowner passes away. The other option is they can sell the home, and this directly involves you as a realtor. Number two is probably the most utilized option, and so they would simply hire a realtor, sell the house, pay off the reverse, and whatever's left in equity would go to the heirs. It's a standard equity sell, very basic. Let's go into negative equity. Oh yeah, by the way, number two is also available to the older homeowners. Let's say this actually happened with one of my past clients. They bought a house with a reverse mortgage. 2 years later, they didn't like the area they were living in. They sold that house, got the equity out, bought another house with a reverse mortgage. And believe it or not, they sold that house too, and then bought another house with a reverse mortgage. So These loans are like regular mortgages, right? You can buy and sell houses. You just can't have more than one reverse mortgage at a time. You can only have one at a time. All right, negative equity. Home value 700,000. Current reverse mortgage balance is 750. As you can see here, we're $50,000 upside down. Now, here's the heirs options. If they want to keep the home, they can. They don't have to pay off the entire mortgage balance though. They only have to pay off 95% of the market value, which is 700,000, right? So 700,000 multiplied by 95% is 665. That's the payoff to keep the home. So now they got the house with 5% equity in it. Now, at this point in time, you're probably wondering, well, there's still $85,000 that's owed on the reverse mortgage. Who takes care of that? Well, that's where FHA comes in. FHA will pay an insurance claim to the original lien holder. They're made whole, right? So the mortgage lenders paid off in full for what they were owed, the 750, and the heirs got the house at 5% below market value. That's known as the 95% rule. This is only available with the FHA reverse mortgage, known as a HECM, which we talked about earlier. There are non-government reverse mortgages, what we call the private sector or proprietary sector. So that's this is only available with FHA reverse mortgages. Now, number two, they can do nothing. They can simply walk away, let the house go into regular California foreclosure. So how that would work is they walk away, notice of default, nobody responds to the NOD, notice of trustee sale, nobody responds to the NTS, then it goes to the courthouse for auction. If it doesn't get purchased at auction by an investor, then it goes back to the original lender or lien holder as an REO. Now, that's how this works. It's a non-recourse loan. So even if the heirs have assets or the deceased borrowers have other houses, assets, cash, investments, it's all untouchable. It's a non-recourse loan. They're all protected. The house will be dealt with. Now, the other option is the heirs could list the house for short sale. How does that work? Well, they simply hire a realtor and list it for short sale. Now, what's the benefit to an heir for doing that? I'll tell you right now. A lot of these servicers or lien holders are offering incentives to have the house listed for short sale. And here's why. If the house is sold on the open market to a direct consumer, it's probably going to sell for a higher purchase price than it would at auction or to an investor. And so that means that there's less insurance claim going out to cover the loss. So it makes sense that these lien holders or FHA or HUD would participate in a short sale listing to try to mitigate some of that insurance money going out, right? Try to reduce it. So selling it to the open market to the consumer is going to help with that. So next time you come across some heirs that have a reverse mortgage or their parents had a reverse mortgage and they're deceased and the house appears to be upside down, there's a short sale opportunity for you as well. So think about that. So very important slide. So try to keep this one top of mind, or look at it every now and again as you approach an older homeowner that has a reverse mortgage, because this is great information for them to know. They may have forgotten or may not have been explained properly. And this will put you in the position to potentially get a listing in the future. Let's talk about some reverse mortgage FAQs. Does the government or bank own the house when you have a reverse mortgage? Absolutely not. That's a wives' tale. These are just loans like any other loan. They're recorded against the title. The homeowner or the trust remains the owner of the property. Can my heirs inherit the home or the future appreciation? Absolutely. Any appreciation in the home belongs to the borrowers or the heirs. Can my heirs inherit the home after I pass away? Of course they can. Now, whether you have a reverse mortgage or not, if you're holding title as a married couple or a single person or any other way back that could wind up in a probate situation, right, if you pass away. So having your house vested in a trust is probably the best way to hold title, in my opinion, which I'm sure you might agree with that. I'm 48 years old. I have a trust set up. I'm not planning on going anywhere soon. I've seen the horror stories, what happens with people that don't have trust set up. So I've done some proper estate planning for myself. Let's put it that way. Now, Can they inherit the home? Of course they can, right? We talked about that. One of the things that I like to do when I go meet an older homeowner is like to pull their property profile. I like to look at how they're holding title, because when I get in front of them, I want to talk to them more than just about reverse mortgages. I want to talk to them about why they're not holding their house in a trust and how important that is. And of course, if they agree with me, that shows them that I care about their situation. And I also get to refer them to some trust attorneys to try to get them set up with a trust. And that might benefit me down the line from a referral from a trust attorney, who knows? So spending that extra time and really understanding and looking at all aspects of your customer could help with some more extra business. If my house ends up being underwater, do I get kicked out of it? Or do I get some sort of strange letter saying I have to start making payments? No. With reverse mortgages, it doesn't matter how much you owe, what your house is worth. As long as you're abiding by the rules of the loan, you get to stay in your house for the rest of your life. It could be completely upside down. It doesn't matter. You can just live in that house for the rest of your life. Now, what are the rules when you have a reverse mortgage? Well, number one here, you have to occupy the home as your primary residence. Okay, so that could be an issue, right? In some cases, maybe the last remaining homeowner that's living in that property that has a reverse mortgage gets dementia or Alzheimer's. If they have to be, out of the house living, getting care, and they're outside the house for more than 12 months, that could be a problem. FHA or HUD's going to want that loan paid off, right? The reverse mortgage lender is going to want it paid off because you're no longer owner occupying your home. Sometimes those borrowers may come back for care in their own property again. If they get back in the house within 12 months of leaving it, the clock restarts, and now they get to live in the house for the rest of their life. So it's an important topic. A lot of older homeowners may not understand this. So it's always a great thing to talk to them about what happens if you need to get skilled nursing outside the property. If you're outside for more than 12 months, the loan should be paid off. If you get back in the house within 12 months of leaving it, the clock restarts. Pay their property taxes, homeowners insurance, or HOA dues if applicable. After having a reverse mortgage, despite not having a monthly mortgage payment, you still have to pay your taxes and insurance and HOA dues if you have them. This was a problem in our industry for many years. Back before 2015, all the way back to the late 80s, you didn't have to have any income to qualify for a reverse, but you still have these expenses going on, and that might lead to a default. So since 2015 to present, we now make sure they have enough income to handle the taxes, insurance, HOA dues, and the basics in life. So now we make sure we underwrite to make sure their income's enough to handle these expenses. Lastly, here you have to maintain the home to minimum FHA standards. What does that mean exactly? Just keep your house in some decent shape. When you get an FHA reverse mortgage or any reverse mortgage, there's an appraiser that appraises the house. Naturally, they want to make sure the value of the property is there, of the asset, but they're also making sure it meets these standards. More times than not, the houses do, but sometimes we get that occasional house that does not. And so we have to get those things corrected. But just keep your house in normal condition and you shouldn't have any problems. The number one culprit, by the way, for defaults in our industry is occupancy. When the older homeowners pass away and nobody communicates their intentions with the property, eventually the house will go into foreclosure. So it's always important to make sure you communicate the intentions with the property after all the borrowers have passed away, whether you want to keep it or sell it. Let's talk about calculating loan amounts, right? So in our industry, age is a very big deal. Every age is a different loan amount, or loan to value, if you will. The older you are in our industry, the bigger the loan to value or loan amount that you get. So the reason why is because these loans are based on life expectancy. If you have a reverse mortgage and you're 90 years old, well, your life expectancy is not longer than somebody who's 62, right? So we can give you a bigger loan amount because it's less time for deferred interest, market fluctuations, things like that. So it's all based on actuarial tables. So age is a big deal. We always base our loan amounts on the youngest person. Now, the app is very simple to use. So the way you want to download this is go to your app store, either Apple or Google Play, and search Rev4PUR, R-E-V, the number 4, P-U-R. Download the app. It's free. It's a calculator. It only calculates the FHA reverse mortgage. So just make sure you're aware of that. Very simple to use. Put the ages of the borrowers in there and the purchase price of the house they're targeting. Hit calculate. it'll tell you the down payment. The down payment, that's your number that you're looking for, because if they have that coming from the house they're selling, or they have that on cash on hand, or they have 100% gift funds from a family member, and that's the amount they have on the down payment, then that's the house they can buy for the most part. You pretty much have done a lot of the underwriting right there in your phone. Now, a couple nuances. When it comes to married couples, only one spouse needs to be 62. So that means that you can be married to somebody under 62. It's just that we need to know who that person is, and we're going to base the loan amount on that younger person. So for instance, if you're 65 and you're married to somebody who's 55, we're going to base the loan amount on the 55-year-old because their life expectancy is longer and you're married to them. And that means they're protected to live in the house for the rest of their life because we lent the appropriate amount for that age bracket. So that's for married couples. Now, for unmarried people, to be protected, you all have to be over 62. So if you have like 3 or 4 people that are buying a house with a reverse mortgage, you all have to be over 62 years of age. However, we will base our loan amount on the youngest of the group. So if you have a 62-year-old, a 65-year-old, a 70-year-old, and a 75-year-old all wanting to use a reverse mortgage, we're going to base it on the youngest of the 4. So that's for unmarried people. Now, for FHA reverse mortgages, 970-800 is what we call our max claim amount, which is a term that we use in our industry, but just know this, it's the maximum value and or purchase price that we use to calculate your loan amount. So if somebody's house is worth $1 million or $1.5 million and they want to use an FHA reverse mortgage, we're only going to give them a percentage of 970-800. That's the maximum value that we look at. So for anything over $1.1 million, like $1.1 million, $1.2 million or so, we start to look at the non-FHA reverse mortgages. These are the loan amounts that go up to $4 million. So literally you can have a house that's worth $10 million and potentially get a $3.5 to $4 million loan amount, depending on your age. So that's a whole different sector. The app does not calculate those loans. You have to get a hold of us for that. And the youngest age to qualify for these is 55 and older. Okay, that's the private sector. And by the way, for FHA loans, the 970-800, I'm hearing it's supposed to go up at the first of the year. So it could be like $1 million, $1.07 million is what I'm hearing. We're just not sure yet on those numbers until we hear from HUD directly. All right, let's talk about who we've seen that's been selling their home amongst these older homeowners. Just based on the calls that we're getting in our office here, based on referrals we're getting from other realtors, based on just industry buzz, right? What are we hearing out there? Well, we're hearing this for sure. Heirs of homes with reverse mortgages, like I said before, they're inheriting their parents' homes that have reverse mortgages on them, and they're listing and selling them. So we're seeing a lot of that. So maybe targeting older homeowners that have reverse mortgages and staying in front of them might lead to a listing one day. Older homeowners moving closer to their family, we're seeing a lot of that as well. We're seeing a lot of folks that are, either leaving the state to move closer to their loved ones who have left the state, or move into a different market. So we're starting to see the older homeowners move because of that as well, to live closer to family. We're obviously seeing older homeowners that are having a hard time in retirement with bills, and they're selling their homes to get access to that equity, and then turning around and buying something downsized and putting some of that equity in the bank. So we're starting to see some of that. We're seeing older homeowners getting ready to retire and downsize, right? They're getting out of the workforce. They're mid 60s, 70 years old, leaving the workforce, selling their bigger home, getting that equity out while it's still there, and then moving on to that next property that's smaller, that's more suitable for their retirement needs. And maybe they're using a reverse purchase to buy that next house, but that's what we're seeing out there. We're seeing older homeowners that could not qualify for reverse mortgage. This is like real-time stuff right here. Like I said, I'm going to get probably 3 or 4 at-bats today for people looking at reverse mortgages, and 3 or 4 of those I'm going to turn down because I can't give them a big enough loan amount to pay off what they owe because the interest rates are high. And so what does that mean? Well, the next option typically is to go hire a realtor and sell their property and get to a different home or move to a different market. So we're seeing that as well. So another thing we're seeing too, which is very unfortunate, I'm probably hearing about 1 or 2 of these a month now, is the divorce, right? We're seeing older homeowners are divorcing. And they're taking their equity, they're splitting it through the divorce, and then they're each buying their own properties with that equity. And a lot of times the equity after they split is not enough to buy their own property outright. And so they're looking at loans and reverse mortgages to buy that next home. So we're seeing that as well. So maybe, networking with some family law attorneys might bring you to a next listing or two, right? So interested in experimenting, trying to find these listings. Well, there's ways to do this stuff. This is a software that you might be familiar with. It's called Title Pro 24/7. We play around with the software all the time. We actually have videos to show you how to target older homeowners, not older homeowners that have reverse mortgages, but more older homeowners that may be living in a home that's too big, maybe a 2,000 square foot home, 7,000 square foot lot. Maybe the house is 2-story, because in Orange County here, the county keeps track of what's a 1-story and 2-story. Maybe they have a pool. Maybe they have, you can bring in income aspects. Maybe their income is lower. Certain loan to value factors. You can use age. So maybe you want to target people that are 65 and up. You can really dig into the software pretty deeply to identify an older homeowner who may be struggling in retirement. And then, of course, what do you do with that data, right? Well, you can drive the neighborhoods to look at those houses individually and see which ones are dilapidated, which ones are, have issues and things like that. Maybe that older homeowner would like to get to a better turnkey property for the retirement that's downsized. There's all sorts of things you can do. So typically back in the day, to get this type of data that's heavily filtered like that is very expensive, but you can do it very inexpensively with Title Pro 24/7. It's like 6 cents a record, pretty cool. And we have tutorials on how to build these lists, videos that show you exactly how to build these lists. Ryan and I have actually hopped in the car and drove and knocked on these doors. We pulled down older homeowners that were in property tax default from this software, and then drove to those houses and knocked on the door. And one of the funniest things happened. One of the customers, or one of the people that opened the door, was a person that came into our office that walked in looking for a reverse mortgage. And that was pretty crazy. We're like, we know you. You came into our office about a year ago looking at a reverse mortgage. True story. So we have a video on that as well. But anyways, Marixa, why don't you share with them how they're going to get access to Title Pro 24/7 with us, our marketing materials, software, everything that we have to help them market toward an older homeowner to list their home.
Yes, thank you, Rob. So if you would like to receive our marketing materials, please send me your emails either through the chat box or the Q&A. Once you do that, I will be sending you 2 logins in your emails today. The first one will be coming from Title Pro 24/7 to set up your Title Pro account. The next one will be coming from us for our website. All you have to do is click the activation link in the email and set up a password. Once you're on our website, you will see a few resources. First, you will see our downloadable marketing materials. We have a variety of newsletters, flyers, door hangers, postcards, and more for you to print. You can put your information on the back of them. Some of them you can put a picture of your headshot or a business card. Next, we have our videos and tutorials that you can access. We have tutorials on how to use your new Title Pro logins to find those older homeowners that are likely to sell in the area. Finally, Rob, if you can move to the next slide, please. So finally, you will see our course refresher, which is a video series of 6 videos that covers what we talked about in class today. Each video is only 8 to 10 minutes long, and you can watch it at your own time and your own pace. Rob, if you can move to the last slide, please. So that is our complimentary access to our materials and different softwares. If you have any questions about our logins, please, or need support, please feel free to call us at 888-242-5959. Again, that is our realtor hotline, and we will pick up the phone for you as much as we can. If you need to email Ryan or Robert directly, here are their email addresses. And the website, thereverseeducators.com, is our agent resource website. You will also be able to see our future classes with Orange County Realtors there as well. Rob, would you like to move on to questions now?
Sure.
So I did see one question pop up earlier. Did you indicate you need reverse mortgage counseling only if you are using the method to purchase a new home?
No, so reverse mortgage counseling is required both in the refinance area and also the purchase loan.
So I don't see any more questions. That was the only question we had. So I think we can go ahead and wrap up the class now.
All right, well, thanks for joining the class today. Obviously, happy holidays, happy Thanksgiving coming up here. Just remember, this is really the big takeaway from this course today is that when somebody, you come across that's older, that owns a house, and they ask you about a reverse mortgage, I want you to start thinking listing, because it's probably going to turn into that. They're going to try to look at a reverse mortgage, and they're probably going to get disqualified based on how much they owe on their current loan, or maybe the loan, or maybe the reverse mortgage didn't provide enough benefit. And selling the house, typically in this market, especially right now, is the better option. So, bring us those clients. Let us vet them out. Let us tell them, hey, look, you don't qualify for a reverse because of this or that, or it's not enough benefit. And then turn that back around to you as a listing, right? That's the idea here. So, that's where we're at with our industry right now. And, we're here to help. Stay in contact. This reverse purchase is a great tool. Try to implement it next year into your overall strategies, or at least have it top of mind when you come across an older homeowner. There's some opportunity out there because we're getting the purchase loan from realtors. So, jump on the bandwagon, so to speak. They're out there. So, and it's always great working with older homeowners. They're a hoot to work with. Great time, great demographic to work with. Just super fun. All right, have a great time for your holiday season, and we'll see you soon.